Good morning, I'm Maiki Oreta, and this is Business 360. From markets to policy, from Manila to the world, we cut through the noise so you can navigate, adapt, and lead in a changing economy. President Bongbong Marcos is pushing for a budget overhaul to prevent a repeat of the multi-billion peso flood control scam that had been draining public works funds. The Philippines and Canada will launch free trade talks in February, a move that could open North American markets to Philippine exporters. The Marcos administration is exploring a Philippine Stock Exchange tech board to help fast-track growing companies from raising capital from public markets. Corruption probes are stalling major infrastructure projects, putting economic momentum and investor confidence at risk. Jeff Bezos reclaims his position as the world's third richest person as Amazon gains on plans to shutter underperforming stores and double down on Whole Foods, its premium grocery chain, as a core growth engine. For over a year now, flood control has been less about protection and more about where the money went. What was once designed to shield communities and the economy from floods has since 2025 become a symbol of how public funds can be drained through corruption and failed oversight. President Marcos Jr. is now pushing for budget reforms to shut down a multi-billion peso flood control scam that allegedly allows some officials and contractors to pocket kickbacks from defective or even non-existent projects. Malacanang says Marcos raises transparency, accountability, and the economic risks of climate change during a meeting of the Economy and the Development Council. Presidential Communications Undersecretary Claire Castro says that the president issues a directive to address flood control failures, climate risks, and other external pressures weighing on the economy.
Naniniwala ang Pangulo na kailangan magkaroon ng reforma sa paggamit ng pondo ng bayan upang hindi na maulit ang nangyari noong mga nakaraang mga maanumalyang flood control projects. Sa usapin ng climate change, iginiit ng Pangulo na kailangan magkaroon ng maayos na forecasting, response at adaptation ang bansa sa pamamagitan ng angkop at modernong teknolohiya. Binigyan din ng Pangulo na dapat pang palakasin ng pamahalaan ang pakikipag-ugnayan sa ibang bansa, lalo na sa ASEAN upang patatagin ang usaping pang-ekonomiya.
Castro says that the government is launching a transparency portal that will allow the public to track agency activities, including procurement and bidding. Local government units are also reminded to ensure accountability in the use of public funds. At the same time, at the same meeting, Marcos calls for better forecasting, faster response, and the use of modern tech to adapt to climate change. He also highlights stronger coordination with other countries, particularly within the ASEAN, as part of a broader push to support economic growth. For businesses and investors, the question is no longer whether there was a problem, but whether these budget reforms, finally translate to discipline, climate resilience, and real protection for our economy. Now, a handshake could open doors, not just diplomatically, but economically as well. The Philippines and Canada are set to begin round one of free trade talks in February, formally launching bilateral negotiations that could expand market access for Philippine exporters and investors. Undersecretary Alan Gepti says that officials from both countries will meet in February, with the Canadian delegation traveling to the Philippines for the talks. Canadian Trade Minister Mary Nang highlights agriculture, infrastructure, and energy as key sectors expected to benefit. The Philippines signals interest in energy, tourism, digital technology, artificial intelligence, food, agriculture, and critical minerals, sectors seen as drivers of long-term growth. Now, Christopher Ilagan, president of the Canadian Chamber of Commerce of the Philippines, says that 2026 is the ideal year to start and finish negotiations, citing shifts in the global trade landscape. For Philippine businesses, this could mean broader access to North American supply chains, new tech partnerships, and a chance to diversify trade at a time of rising global uncertainty. Now, the Philippine Stock Exchange could be on the verge of a major shift, opening public markets to the next generation of tech companies. government is exploring the creation of an emerging tech board that would allow high-tech growth tech firms to access public capital and scale faster. Department of Information and Communications Technology Secretary Henry Aguda says he is working with the Philippine Stock Exchange, the Securities and Exchange Commission, and the Department of Trade and Industry to establish the board inspired by a NASDAQ-style tech market. Policy is expected to be finalized this year. Philippine Stock Exchange President Ramon Monzon and Securities and Exchange Commission Chair Francisco Lim have expressed their support for the initiative, with at least 15 Philippine tech companies already signaling interest in potential listings. Experts Juan Paulo Colet of China Bank Capital Corporation and Toby Allen Arce of Global Link Securities say that the board could lower barriers for innovation-driven firms, attract both domestic and foreign investors, and help modernize the local capital market. They caution, however, that success will depend on strong governance, clear rules, and effective regulatory oversight. This represents a potential turning point, a chance to deepen the tech ecosystem, draw fresh capital into the market, and modernize the Philippines' financial infrastructure, provided investor protection and transparency are enforced. In other news, after decades of debate, the question is no longer whether political dynasties should be regulated, but whether the country is ready to do it properly. The 20th Congress is opening hearings on long-stalled anti-dynasty bills, turning to election and legal experts for guidance on how and whether such a law can finally work. COMELEC Chair George Garcia warns that a single law may not be enough. He calls for broader election reforms to ensure fair access to public office and curb the entrenchment of dynastic power. UP Law Professor Lee Edison Garcia, Integrated Bar President Alan Panolong, and UP Public Administration Professor Michelle Castillo say definitions must extend beyond elective posts to include appointive positions. They also push for rules on successive office holding and stronger voter education to make reform effective. CPRD Director David Yap and human rights lawyer Nery Colmenares stress the need to balance constitutional rights with limiting the concentration of political power. They say the anti-dynasty law must respect voter choice while addressing structural inequality in politics. For governance and investor confidence, this marks a test of political will, with meaningful reform likely to require coordinated, multifaceted action far beyond a single piece of legislation. Now, the Philippines may be spending more on education, but it's still far from where it needs to be. Despite higher budgets, the country remains decades away from global education standards, prompting the Second Congressional Commission on Education to push a 10-year national plan that would raise minimum education spending to 5.5% of GDP by 2035. The roadmap carries an estimated cost of 2.66 trillion pesos. That's around 60% of that is allocated to basic education, funding classrooms, teacher training, and programs aimed at improving functional literacy. Higher education is set to receive about 30% of the budget, mostly from scholarships. The remaining funds are allocated to early childhood development and technical vocational training. The Commission says the plan aims to align government, schools, and communities, strengthen accountability, and scale programs such as the Academic Recovery and Accessible Learning Initiative to support students who have fallen behind. For business and policymakers, this is a long-term bet on human capital, one that could shape workforce quality, productivity, and the Philippines' economic competitiveness for the next decade. Now, when infrastructure stops moving, the economy feels it fast. The Philippine government is facing intensifying pressure to unfreeze public works and push through reforms as a corruption scandal continues to paralyze major infrastructure projects. Lawmakers and watchdogs warn that every month of delay leaves billions of pesos idle and further erodes public and investor trust. German bank Deutsche Bank estimates that a 20% increase in infrastructure spending could boost GDP growth by as much as 1.3 percentage points. Instead, ongoing investigations and project freezes have kept key funds on the sidelines, dampening consumer confidence even as the government pushes for stronger growth. The scandal has driven consumer confidence to its lowest level since the pandemic. Direct infrastructure spending dropped by 40% last October, slowing projects that could have supported jobs, demand, and economic activity. Economists now see 2025 GDP growth at around 4.8%, below the government's targets and a clear signal of the cost of stalled reforms. Economists also warn that key structural reforms, including politically sensitive measures such as the Anti-dynasty bill, could be pushed back until after the 2028 elections. For businesses and markets, the message is clear. Fiscal recovery and stronger growth now depend on decisive action, restored governance, and getting infrastructure spending back on track. After a mid-year soft patch, Philippine car sales are picking up speed again. The market is on track to surpass 500,000 units this year, signaling a cautious but broadening rebound in consumer demand. Analysts say that the recovery is being driven by shifts in what Filipino buyers want and in what they can afford. The Chamber of Automotive Manufacturers of the Philippines, or CAMPI, says rising demand for electrified vehicles and multi-purpose vans is powering the sales. Buyers are increasingly choosing greener, more practical models, reshaping the market mix. CAMPI President Jose Maria Atienza says that the uptick translates to around a 2 to 2.5% increase, with full-year sales projected at about 503,000 units, depending on market conditions. The outlook points to a modest but steady recovery after last year's uneven performance. Industry data shows 491,395 vehicles sold in 2025, up 3.7% from 2024. Sales from CAMPI and truck manufacturers, the Truck Manufacturers Association members, reached 463,646 units, indicating broad-based participation across the sector. Atienza describes the industry outlook as conservatively optimistic, following a sales dip in the second half of last year. For the economy, steady auto sales suggest consumer resilience, with positive spillovers for manufacturing, dealerships, and employment. Now, more Filipinos are queuing for visas than ever, even as global travel hurdles persist. Outsourcing and tech services company VFS Global reports an 8% rise in applications in 2025, signaling renewed confidence among outbound travelers. Australia, Canada, Germany, Japan, and the United Kingdom top the list of sought-after destinations. Applications using VFS Global's Visa at Your Doorstep service surged 62%. Atul Lol, VFS Global North Asia head, cautions that rising demand also opens the door for scammers. The company cannot guarantee approvals or fast-track applications. Lol urges applicants to use authorized centers in 8 Philippine cities and to verify all information directly with client governments. Now, this uptick reflects stronger global engagement and growing middle-class mobility, but also underscores the need for vigilance against fraud in travel services. We're taking a quick break. This is Business 360. Welcome back. The Philippine economy enters 2026 with growth below target and confidence still fragile. Public spending has slowed, households remain cautious, and economists say 2025 may rank among the weakest growth years in over a decade. Against that backdrop, one area continues to attract capital: the country's economic zones. The Philippine Economic Zone Authority, or PEZA, just posted its strongest performance in 7 years, even as other growth engines stalled. The question now is, can economic zones help stabilize the economy and turn investor interest into real jobs and exports at a time when confidence remains shaky? Joining us now is Philippine Economic Zone Authority Director General Tereso Panga. Good morning, Director General Panga. Thank you for being here with us.
Good morning, Ms. Maiki. Thank you for having me in your program. It's a pleasure.
Okay, all right. So PEZA sits at the front line of investment decisions, and based on 2025 figures, investment approvals were pretty solid. You recorded an increase of 22% year on year in 2025. You hit your 250 billion target, exceeded that to 262 billion pesos. How's 2026 shaping up for PEZA?
Well, because of that 22% increase in our investment, so from 250 billion pesos in target investments last year, which we were able to breach 22% higher, we're targeting 300 billion pesos in investments for 2026.
Okay, a much higher target. It's still early in 2026, but does it look like this is within reach?
Well, yes. In fact, I just came from a mission from the U.S. and already we're getting a lot of leads. Some of these will be applying soon for projects with the PEZA. And so it's so encouraging as we anticipate more investors to actually register their projects with PEZA.
Yeah, I think we have to point out that these eco zones are seen as safe havens. Foreign investors look at them and they think of them as insulated from everything else that goes on. What do you think, Director General Panga? Despite the political noise, are foreign investors still feel safe in these economic zones?
Well, I can say that for PEZA, I think over time we have extended consistently our mantra of one-stop shop, non-stop shop, and only red carpet treatment for investors. And somehow we have become a safe haven for investments so that when we attract investments into the economic zones, the investors feel like they are insulated from all these internal and external shocks. And so somehow we have provided the best location and business ecosystem for investors through the PEZA economic zones.
Yeah, okay. Drilling down into that, as we move into 2026, what does the reality look like on the ground? What's happening within the economic zones? Are people moving more into construction? Are they starting to hire more? Are people starting to export more? What are you seeing in the early stages of 2026?
Well, as I've said, it's early to tell, but it's not to say that all these global impacts are not weighing down on our investors. So obviously that will be a cause for concern. But we're encouraged by the interactions with our investors in our investment missions. And in fact, we just had our board meeting where we approved some 7 billion pesos in investments. And so it's so encouraging that we continue to expect more projects to be applied with PEZA in the coming months.
7 billion pesos in investments. That's from which countries and for which particular sectors? Right now, we lead in electronics, automotive, food, IT, BPM. This 7 billion pesos, where is that going to go?
Well, most of these investments are driven by manufacturing sector, where it accounts for 59% of our total investment. So these are both by export and domestic market oriented. And it's really the electronic sector that is driving our growth.
Yeah.
And coupled by the bullish growth forecast by IT BPM, which accounts for 11% of our total investments in PEZA.
That's good to hear. So would you say, Director General Panga, that you are relatively insulated from the, more modest growth GDP outlooks for the country?
Well, that's what we're getting from investors. I think the investors that we cater to are investing in the future rather than the present. And so they have huge trust in doing business in the Philippines. I think in choosing to locate in the Philippines, the biggest edge really is our huge talent pool and the complete supply chain that we have in the economic
Yeah,
zones.
huge companies like Texas Instruments have been in manufacturing in the Philippines for over 40 years. That says a lot. What other markets, what other sectors can we tap moving forward that we aren't already?
Well, we can leverage on the new free trade agreements that we have entered into. Obviously, this has broadened our investment and trade ties with other countries as new sources of investment. So for 2026, our best bets really are those investors coming from Taiwan. We have China. Of course, Japan has always been consistently our biggest investor. US is coming in quite strong after they have tripled the level of investments. And importantly, also from the EU market, we have the British as among our biggest investors in PEZA.
Yeah, those that invest in PEZA they're looking for the long-term game. They're looking at the future. What are these investment approvals? What does the pipeline say about the future of PEZA, 2026 and beyond?
Well, we can see from the performance of the Philippines as an investment destination. I would say that we're still very much in the ball game. In fact, according to IMF, we're the fourth largest economy in terms of nominal GDP, bigger than Vietnam and Malaysia and closely following Thailand. And GDP to us is a sign of economic strength. And for as long as we continue to be one of the best performing economies in the region, that can be a sure sign that we will continue to be a major draw for investors. So the investors we're getting in are for long haul. These are the long haul investors. In fact, 60% of our mix of industries and investors had been here for the longest time. And they've seen it through
Multiple economic cycles.
Yes, through thick and thin, and they never lost faith and confidence with the quality of governance that we provide in the ecozones, and more importantly, by the Philippine government.
It's good to hear they're able to put that short-term noise aside and focus on the long term. I wanted to drill into this. Many global companies are moving their hubs out of China. They're moving production out of China. When they compare the Philippines with Vietnam and Indonesia, how often do we win? How often does the Philippines win when they make those investment decisions?
Well, from the learnings from the original China Plus One strategy, obviously all investments mostly went to Vietnam. But you know, there is this strategy now called China Plus One Plus One. And this is where we see a lot of companies also shifting production out of China and in favor of more neutral and resilient hubs like the Philippines. And we see it from our investments. In fact, last year, among our biggest investors were Chinese, almost 15 times bigger than their investments in 2024. We see also more American companies, triple the size of their investments in 2024. And so what we're saying is the Philippines is obviously benefiting from this China Plus One strategy, this so-called global diversification of supply chains. In fact, from one leading European and global automotive player, they were telling us that based on their demands of their clients, which are Japanese and Korean car makers, they're telling us that they want to channel their investments to the Philippines because it seems they cannot be viable putting in products that are made in China, getting into their products, especially for exports to the US and EU. The other upside is we're also getting some American investors locating in the Philippines, not just to export back to the US, but purposely to be able to export to China as well.
Yeah, okay, interesting. Okay, what else can we do? So they already believe in us. What can we do to deepen our manufacturing base? What can we do to get more than what we're getting already? We want to make PEZA not just a bright spot in the economy, but an actual pillar, major pillar of economic growth. In order to get from where we are to where we would like to be, what do we need from the government? What do we need now from, not just from the government, but from the private sector for that big push?
Well, the consistent and persistent asks that we would usually get from our investors have to do with, of course, one is cost of doing business. The other is the ease of doing business. On the cost of doing business, as we know it well, power being a vital factor of production is a big disincentive, because apparently the Philippines is second to Singapore as among the highest in terms of electricity rates. And so we need to produce more power plants. The strategy of PEZA is how we can embed all this, whether it's power or water, because by doing that, we're able to significantly reduce cost of power and water. The other one on ease of doing business, I think it's a common complaint by investors, by the private sector, that there's too much regulation in the Philippines, starting with registration, including facilitation of investments and permits. And so ideally, what we want to achieve in PEZA is that there can only be one government in the PEZA zone, so that we can take care of all their permits, we can handle our investors, they only have to deal with us. And being insulated from the other agencies mean a lot to them.
So specifically, what's the ask from Malacanang, from this administration? We've got about 2.5 years left. What's the specific ask for Malacanang?
Well, we are in the thick of submitting our proposed amendment of the PEZA law. We're a 30-year-old agency, and we feel that we need to be more empowered. We need to modernize with how we do business inside the PEZA economic zones. I mean, we can attract some more if we're able to really make it easy for our investors. We're able to attract emerging technologies. So the strategy of PEZA is how we can create more economic zones, particularly in rural and new growth areas, so that with that we can accelerate countryside development.
Great. Most of the PEZA eco zones, where are they now, and what are the new locations that we can tap for more economic zones across the country?
Yes, so other than the Calabar zone, which hosts the biggest number of economic zones under PEZA, so among the new growth areas, we have Region 3, of course, Region 7, and in PEZA, we're developing our public economic zones in Palawan, which is touted to be the biggest in the region, 28,000 hectares, in partnership with the Bureau of Corrections. And the other one is in Bicol, in Pantao, Libon, which sits at the eastern seaboard, which are really designed to welcome investors coming from Pacific.
Yeah, and on the education front, because this will generate lots of jobs for Filipinos, what do we need to beef up on the education side in order to, attract these investments and really retain them and attract them with a high quality workforce?
Well, we feel that we need to diversify our mix of products and industries, and to be able to do that, we really need to upskill and reskill our workforce, starting with preparing them for advanced manufacturing. We feel that AI will drive the next technological revolution, and so it's a must that we train our workers to be AI proficient, and for which we have launched already our AI Tech Academy, the first of its kind in the Philippines, in partnership with the private sector, and TESDA putting in the money to provide free training grants. So that's on the advanced manufacturing. The other is on IT BPM. We can go up the value chain if we're able to attract really global capability centers, those into software development. And so this will exert a lot of pressure on how we can prepare our workforce for this so-called technology of the future.
Yeah, nice to hear that the PEZA is not feeling that economic pinch that others are, that you guys are insulated within these economic zones. So your 2026 target, 300 billion pesos. After getting 262 billion pesos in 2025, an increase of 22%. Do you think that in 2026, PEZA will be able to match that or possibly exceed that 22% increase, double-digit growth again? Are you expecting for 2026?
Well, that's the ambitious target of PEZA. So that has always been our position. We look at we are more on the optimistic side. I think we can draw from our experience in PEZA, where we have managed to achieve consistently 23% growth rate, upward trajectory in investments, and so there is no letdown. We will continue to be bullish as we promote the Philippines to global investors.
Yeah, fantastic. Okay, taking everything all in, what are the metrics by which you measure that success, the success of PEZA in 2026? What are you looking at? What are the figures you're looking at to, of course, beyond the headline number, whether you're able to hit your growth targets? What are the specific figures that you're looking at?
Well, foremost, we go beyond the investment approval. So what is important is how we can translate this into real projects, realized investments. Because with that, then we can generate the much-needed jobs, which is, by the way, the biggest KPI of PEZA. There's jobs, there's exports, and of course, countryside development as we get in more LGUs to be hosting economic zones. So really, how we can provide for more jobs, livelihoods, support communities, and provide long-term value for our investors.
Yeah, and with a target of 300 billion pesos in 2026, how many jobs do you see that creating?
We're looking at 100,000 new jobs for this year, and I think the bulk of it will be contributed by the IT BPM, which doubles the level of jobs being generated by manufacturing. We see a lot of potentials also from domestic market-oriented projects. Many of these are actually Filipinos. So they're now benefiting by being hosted by PEZA, because under the Create More regime, when they locate in the PEZA zones, they too can enjoy fiscal incentives.
Yeah, so just to recap, regardless of the political noise, no hesitation from foreign investors with regard to investing long-term in the Philippines?
Well, we've been through this. I mean, through thick and thin, the boom and bust cycle, whether it's internal or external. PEZA, 30 years in history, and before us, in 1969, we were predated by our predecessor agency, EPSA. And one thing stands out is that the fact that we've been hosting long-haul, long-term investors, so once they locate in the PEZA zones, I think it's to their best interest to continue doing business and expanding their business in the Philippines.
Yeah, this is exactly what we want, the long-term investment. Okay, Director General Panga, let's do a quick fire round. One sector you believe can still grow even more?
I think electronics, well, it's actually three sectors: electronics, pharma, and IT BPM.
Okay. One investor concern you hear more often now than ever before?
Well, it has always been high cost of logistics and power.
Okay. One reform that would immediately lift confidence?
Well, I would say first is on governance, if we can resolve all these corruption issues, and if we can further enhance ease of doing business.
Yeah. And an advantage PEZA has, even amidst GDP, sluggish GDP, slower than expected GDP.
Well, we always say that we can be a safe haven for investors. We can provide for the best location and business ecosystem for investors.
And a risk, the biggest risk that keeps you cautiously optimistic for 2026?
Well, if all these political risks are not resolved immediately, the worrisome to investors is this might lead to a downgrading of our credit rating, which will surely drive up cost of doing business in the Philippines.
Yeah, hopefully we don't go there. And a key trend emerging that you're most excited as the Director General of PEZA?
Well, these global disruptions could be an added attraction to the Philippines, opportunity, even a windfall for us that other nations are now looking us, especially those looking at Asia Pacific, where Philippines can be their hub, as making Asia Pacific as their gateway, using the Philippines as hub.
Yeah, that would be fantastic. Thank you so much for your time as the Director General, Teo Panga.
Thank you very much, Ms. Maiki.
All right. Please stay with us. More business stories and the signals behind them when Business 360 returns. Welcome back. Robinson's Land is tapping capital markets to fund its next phase of growth. The Gokongwei-led developer is raising 7 billion pesos by selling a portion of its stake in RL Commercial REIT or RCR to finance new projects and support expansion plans. The overnight block sale involves 945.95 million common shares priced at 7 pesos and 40 centavos, 7 pesos and 40 centavos each. The transaction is backed by local and foreign institutional investors, indicating solid demand despite its size. Following the sale, RCR's public float increases to 8.64 billion shares, or about 44% of total shares. The higher float gives Robinson's Land more flexibility for future asset for share transactions and other strategic options. The market reaction is muted. RLC and RCR shares edge lower, a move analysts say is typical after large block sales and does not change the company's long-term outlook. For investors, the deal highlights how local developers are using REITs and capital markets to recycle assets, fund growth, and maintain financial flexibility in a volatile environment. Now, European Spirit is entering a fast-growing Philippine market. Spanish brandy is now making its official move into the country as local consumer tastes continue to shift up the premium curve. Celebrated Filipino rum maker Tanduay is partnering with Spain's iconic Torres brandy, bringing a European label into one of Southeast Asia's fastest-growing liquor markets. The partnership launches Torres 5 Light, a well-known international brand registered locally as a 25% alcohol spirit. It is positioned as an accessible premium option for Filipino consumers exploring global brands. Tanduay President and CEO Lucio Tan III says that the move supports the company's strategy of expanding its world-class spirits offerings. The partnership also deepens its premium portfolio as Filipino consumers show growing interest in heritage-driven international liquors. For the industry, this signals rising sophistication in local tastes, giving consumers more choice and positioning the Philippines as a more attractive market for global liquor brands. Now, global fuel shocks are quietly making their way into your electricity bill. The Energy Regulatory Commission has approved 31 billion pesos in fuel cost recovery for Meralco and several power generators, a move that passes on part of the global energy squeeze to local consumers. Meralco and 4 power producers are now allowed to collect an additional 28 centavos per kilowatt hour from consumers. The increase will be spread out over 12 to 36 months, designed to ease the impact and avoid a sharp bill shock. The companies cite soaring global fuel prices, compounded by Indonesia's coal export ban and the Russia-Ukraine war, as the key drivers of the additional costs. Energy Regulatory Commission Chair Francis Saturnino Juan says earlier collections will help offset the adjustment, meaning most households are expected to see little to no immediate change in their power bills. For consumers, this is a reminder that global energy shocks eventually filter down to local power costs, even as regulators try to manage the impact and keep the increase as gentle as possible. Now, truck sales often move with the real economy, from infrastructure build-outs to logistics demand. Isuzu Philippines extends its lead in the local truck market, marking its 26th consecutive year as the country's top-selling truck brand. In 2025, Isuzu holds a 42.2% share of the truck market, with sales of nearly 5,000 units. Year-on-year sales rose 4.4%, with the company leading the light, medium, and heavy-duty segments. Looking ahead, this 2026 demand is expected to track infrastructure activity, logistics expansion, and fleet replacement cycles. The sector remains closely linked to business investment and public spending. For markets and businesses, truck sales continue to serve as a useful read on economic activity, reflecting how confident firms are about deploying capital. Now, as gambling platforms expand both online and offline, the boundary between betting and investing is becoming less clear for many Filipinos. Experts warn that the pull of high-risk, quick-reward activity is distracting from long-term wealth building and disciplined financial decision-making. On BNC's Business Brief, Dragonfly Securities co-founder and CEO John Carlo Lim says stronger financial literacy is key to building a healthier investing culture and more sustainable household wealth.
So Filipinos are not risk-averse. How do I know this? There's 40 million Bingo Plus accounts at the end of 2025. Filipinos are just addicted to the wrong kind of risk.
Investment, the risk, yes.
Yeah, we're addicted to the wrong kind of risk. We want a binary outcome that with instant gratification,
yes,
rather than long-term harvesting. So I think that's the sad truth, and it's something that we must face as a nation, because if we want to progress as a nation, we have to engender an investing culture.
PLDT is putting more money into data and digital services, a sign that growth in telecom is no longer just about calls and connectivity. The company is stepping up investment in tech that shapes how customers are acquired, retained, and served. The Pangilinan-led firm has approved a 1.22 billion peso subscription for additional shares in Kayana Solutions, maintaining its 45% stake in the data-driven digital experience company. The move follows PLDT's initial investment last September, when it bought 594 million shares in the company, then known as Digico, as part of a broader push to personalize customer engagement and digital services. Markets responded positively. PLDT shares closed 12 pesos higher at 1,360 pesos as investors bet that digital capabilities can drive growth beyond traditional telecom revenues. For the industry, this highlights a shift underway where data, analytics, and digital experience are becoming as critical as network infrastructure in determining competitiveness. Now, despite softer sentiment around high-rise living, developers are still placing bets on urban density. Ayala Land's Avida is launching a 3.1 billion peso condominium project in Quezon City, testing the demand for vertical housing in a price and rent-sensitive market. Called the Heights Katipunan, the 33-story development will house 758 units along Katipunan Avenue. The project is aimed at students and investors seeking stable rental yields near educational hubs. Amenities include a pool, meeting room, study hall, multi-purpose hall, and gym with units offered in multiple orientations. Avida Land expects the project to generate around 6 billion pesos in revenue. The developer is also planning 3 horizontal residential launches in the first quarter of 2026 in Laguna, Tarlac, and Rizal. For the property sector, this points to continued confidence in rental-driven urban housing, even as developers balance high-density projects with expansion into suburban and provincial markets. After 3 years of correction, global fintech is showing signs of stabilization. Israel-based Viola Ventures says that the sector enters 2026 on firmer ground, leaner, more selective, and more focused on durability than rapid growth. The firm describes a reset in the fintech landscape. In Israel, companies raised $1.4 billion in 2025, while mergers and acquisitions surged to $5.8 billion, up from $1.2 billion a year earlier. Viola says that the activity points to disciplined consolidation and strategic deal-making, not a return to previous excesses. For markets, this marks a shift in investor priorities, with fintechs that show strong fundamentals, clear paths to profitability, and sustainable models that are positioned to attract capital in a more selective global environment. Now, President Marcos faces questions over the 2025 budget insertions worth 100 billion pesos. On PNC's On Point, Navotas Representative Toby Tiangco said claims that Marcos ordered the projects lack proof, pointing instead to former Ako Bicol party list representative Zaldico, who allegedly carried out those insertions. Tiangco adds that such moves could not have happened without the knowledge of former House Speaker Martin Romualdez, raising scrutiny over fiscal oversight.
Credible testimony directly implicates the president as the architect, yan po nakasulat, and beneficiary of this scheme. Former Ako Bicol Representative Zaldico has alleged that the president ordered the insertion of 100 billion in projects, ito po yung lumabas dun sa video niya, providing a list of such projects. Such insertions have been subsequently validated as these do not appear in the NEP but appear in the GAA.
Yes, it was not in the NEP, it was in the GAA, is definitely an insertion. Pero ang sabi ni Zaldico, utos ng Pangulo. Pero anong proof ni Zaldico na utos? Diba? Wala naman siyang proof. Ang maliwanag doon, ginawa niya yung insertion. So kaya nga dapat si Zaldico talaga ang mapauwi dito, di ba? And again, sasabihin ko, hindi naman pwedeng gawin niya ni Zaldico nang hindi alam ni Martin Romualdez.
Former Speaker Martin Romualdez.
So silang dalawa yung dapat mapanagot dyan, di ba?
Up next, global markets, what's moving and why. This is Business 360. Welcome back. Europe's auto market has reached a clear inflection point. Electrification is now mainstream. In 2025, hybrid electric vehicles overtook petrol cars as the most popular powertrain, signaling a major shift in consumer preference. European Union new car registrations rose 1.8% to 10.8 million last year, according to the European Automobile Manufacturers Association. Sales, however, remain below pre-pandemic levels, pointing to modest overall market growth. Hybrid sales jumped 13.5% to claim 34.5% of the market. Battery electric vehicles surged 30% to 17.4%, while petrol and diesel sales continued to decline. The data shows consumers are moving toward electrified options even without a full market recovery, prioritizing efficiency, flexibility, and lower emissions over traditional engines. Now, as the Federal Reserve meets on interest rates, markets are already looking beyond the decision and toward who could lead the central bank next. Prediction markets are emerging as a real-time barometer of investor expectations around Fed leadership. Data from Kalshi shows BlackRock bond chief Rick Rieder as the front runner with a 48% probability of him becoming the next Fed chair. Former Fed Governor Kevin Warsh follows at 31%, while current Governor Christopher Waller trails with an 8% chance. The odds come just a day before the Fed releases its latest policy decision, highlighting how closely markets are tracking both interest rates and the future direction of monetary policy. Now, in other news, UPS is moving aggressively to cut costs in 2026, even as earnings come in ahead of expectations. The company plans up to 30,000 job cuts and the closure of 24 facilities as it reduces dependence on Amazon deliveries. UPS says it is in the final stage of cutting Amazon volume, with another 1 million packages per day set to be removed from its network next year. The strategy is aimed at improving margins and shifting toward more profitable business. The company forecasts 2026 revenue of $89.7 billion and reported fourth quarter results that beat Wall Street expectations. The stock rose 4% following that announcement. UPS expects revenue to dip in the first half of 2026 before picking up later in the year once the Amazon reduction is complete. In other news, the U.S. dollar is sliding to a 4-year low as markets react to political signals and rising currency volatility. The move comes after President Donald Trump described the dollar's value as great, even as investors continue to sell the currency. The dollar index fell 1.4% to 95.77 as Trump spoke to reporters in Iowa ahead of a major economic address. The greenback has been under sustained pressure as traders price in the risk of possible U.S.-Japan currency intervention. The yen has rallied while the euro has climbed above $1.2 for the first time since 2021. Attention now turns to the Federal Reserve's policy meeting this week, with the dollar remaining under heavy selling pressure as markets assess the outlook for rates and currency policy. Now, global stocks climb for a fifth straight session as investors focus on earnings and await a Fed decision. S&P 500 and the Nasdaq rose, with the S&P 500 notching a record close, while the Dow fell 0.8%, dragged down by losses in Boeing and United Health. The dollar slid to a nearly 4-year low ahead of the Fed policy statement as MSCI's global stock index hit an intraday record. Markets now turn to more major earnings this week and the Fed's policy announcement on Wednesday. And here's a quick look at how global markets performed overnight. The S&P 500 barely managed record closing high on Tuesday, its fifth straight day of gains, with investor optimism ahead of mega-cap earnings reports being countered by a mixed reception to the latest earnings reports and a massive sell-off in health insurer stocks. The Nasdaq touched its highest level since the late October, and the S&P 500 also touched an intraday record high near the 7,000 milestone, while also marking its fourth record closing high so far in 2026. Over in Europe, London's FTSE 100 gained on Tuesday, led by advances in heavyweight banking stocks ahead of a packed week of corporate earnings and the U.S. Federal Reserve's rate decision. Now let's check on how Asian markets are doing this morning. The Nikkei 225 is trading to the downside, lower by 0.6% in early trade. Hong Kong's Hang Seng Index down 1.32%. Hong Kong's Hang Seng Index is trading to the upside, up by 1.32%. Shanghai's Composite in the green as well, up by 0.4%. And Singapore's Straits Times Index going the other way, just like the Nikkei 225, down by 0.6%. Here at home, taking a look at our market as of 10:51 this morning, the main gauge is trading to the downside, lower by 0.2% to 62.95. The broader all shares index in the red as well, down by 0.3% to 35.69. Taking a look at all these sub-indices limiting the market's decline right now are the financials and the mining and oil counters. Now, total volume right now is at 430 million shares, valued at 1.67 billion pesos. Market breadth is slightly bearish. We've got 78 advancers against 88 decliners, while 53 stocks are unchanged. Taking a look at the currency front, the peso opened at 58.85 against the greenback, up from its previous close of 59.09. Now, renowned Filipino architect and designer Lor Calma has passed away, leaving behind a legacy in modern Philippine architecture. He was celebrated for his thoughtful design philosophy, contributions to the nation's built environment, and his generous, calm presence among family and colleagues. He is survived by his wife, children, and grandchildren, who invite the public to honor his life and offer prayers. Wake services will be held on January 28th to the 30th at the Heritage Memorial Park in Taguig, with interment on January 31st. Now, shifting gears, Jeff Bezos is back on top, taking the world's third richest spot. Amazon shares jumped after the e-commerce giant announced it will close all Amazon Go and Fresh stores to focus on online delivery and to expand its top grocery chain, Whole Foods. Bezos' net worth climbed $4.8 billion to $254 billion, overtaking Google co-founder Sergey Brin. Analysts say that the move positions Amazon to compete with Walmart, Target, and Costco while accelerating its grocery expansion strategy. Now, some of Chile's finest wines are finding their bestseller under the sea. Off the coast of Locos Island in northern Chile, bottles are being aged underwater, secured in cages on the seabed. Entrepreneurs tied to a local diving center say that the ocean offers near-perfect conditions, constant temperatures, minimal light, and slight negative pressure mimic traditional underground cellars. Bottles spend between 8 months and a year submerged. White and cool climate varieties like Chardonnay, Sauvignon Blanc, and Pinot Noir thrive, while fine Pacific Ocean sediments naturally coat the bottles. The partners hope that the program will not only refine the wines, but also draw tourists to nearby Bichidangui Beach.
This project was born out of two passions. One is love for scuba diving, and above all, at the same time, the willingness to try new things and what we knew about how wine underwater evolves. We tested different alternatives, shapes, boxes, wrapping, wineries. Little by little, we're finding certain products that perform very well underwater.
The story highlights a growing trend in experiential tourism and niche luxury products. Creative approaches like underwater aging could inspire local vintners and tourism operators to combine innovation with regional attractions. Now, it turns out your morning coffee might boost your mood, might boost your mood, not just for everyone. Occasional sips can help when you're stressed, tired, or running on little sleep. Doctors Ramin Moshtabai of Tulane University and Mali Wong of SUNY Upstate say caffeine temporarily lifts dopamine and alertness, but regular drinking can dull these effects over time. Laura Juliano, chair of psychology at American University, says 1 to 2 cups a day are ideal. Too much can trigger anxiety or disturb sleep, and children under 12 should definitely avoid coffee entirely. Epidemiologist Dr. Hong Lei Chen of Michigan State University warns that coffee is not a treatment for depression. Exercise, social interaction, and sleep offer longer-lasting mental health benefits. For Filipinos, your daily barako can perk you up, but relying on coffee alone won't beat fatigue or stress. Pair caffeine with rest, movement, and social time to stay sharp and healthy. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us. Keep it here on BNC, the Bilyonaryo news channel.